Hello there, Maverick traders, and welcome to today's currency recap. It is February 2nd, the day after Fed Day. Looks like the dust has settled and the markets are feeling optimistic. Equities have rallied to their highest level in 5 months, much of this fueled by Meta. And in aftermarket news, Apple has missed sales in a big way, so it'll be interesting to see how that affects overnight action in the equity futures markets. So market optimism definitely on full display, but interestingly enough, the dollar got a bit of a break and managed to stage a relief rally. So I've been talking about this neckline in this inverse head and shoulders for some time, saying how, hey guys, look, I think it's a fake, it's going to be a fake breakout. I won't be able to keep saying that much longer if we keep having rally up days like this one today. I'm still maintaining my bias for now, my bearish bias, that is. So long as we stay below the August highs, I'm going to maintain that this pattern has a lot of potential for a fake out. If we take out those August highs, however, then I'll be personally switching to a buy the dip kind of mentality. Now, it's very important when you have a view on a market and the market's not going the way that you would expect it to, that you don't get married to that view. And that's the difference between being a market analyst and being a trader. A market analyst can have whatever view he or she wants. A trader, on the other hand, has to contend with risk. So when I say I have a view, that doesn't mean that I'm shorting the market every day. Just how if I have a view that the market's bullish, I'm not buying the market every day. I still have to trade my plan. I'm just saying, based on the price chart, I have a certain expectation. And if what happens on the price chart matches my expectation, that's when you have a high quality trade. Anyway, moving on to the total world stock index, very similar situation here where we've broken above the August high, so I think it's reasonable to expect that the S&P might do that as well. And again, we've well past the inverse head and shoulders in this pattern also. Over in crypto land, the crypto basket is looking a little bit tired. There's a very wide gap here between the 20 and 50 period moving averages, as you can see on the chart. If you're long cryptos, that would make me nervous personally. I am expecting a pullback here. Markets must correct either through time or through price. And given how much of a run we've had, my bet is on price right now, not time. So ironically enough, only time will tell whether I'm right on that point or not. But I really do expect the moving averages to come back in line with one another and meet up once more before we get the next large directional thrust in crypto. Okay, so we still have a heavy news week ahead. Tomorrow we've got non-farm payroll reports, so that if you were thinking there might be another shoe to drop, it's coming tomorrow, and I think it's pretty clear that the Fed is concerned with the labor market and how hot that labor market is. Unemployment is hovering near historic levels. So let's see what happens tomorrow with those non-farm payroll reports. The number to watch out for would be an increase in average hourly earnings. If there is a big increase in average hourly earnings, that's something that could stoke inflationary fears once again. Now, in terms of the market outlook, I'll give this a 2.5 out of 3, plus 2.5 out of 3. That is, I would like to see a little bit more of a steeper upward slope before I'm fully on board with a plus 3. But yeah, that's the rating for now. Okay, so moving on to currency analysis. Cryptos, the basket was pretty much flat at time of recording today. Cardano up a little bit, but Litecoin down. Bitcoin Cash and Ethereum up as well. Bitcoin and Ripple more or less flat. In fiat currency land, the British pound was the clear loser on the day, and the yen and the dollar outperformed on a relative basis. And also following the pound was the Australian dollar, which was also a loser on the day. Now, in terms of velocity, I'm seeing some signs of positive velocity in the yen and the dollar, and definitely negative velocity in the pound. So we're going to take a look at those currencies in just a moment as we head into TradingView. Okay, so taking a look at TradingView, I want to start off with the yen. So we're clinging on to this trend line right here. so long as we don't break below that, I think it's possible to look for opportunities to go long the yen. We might get a triangular kind of formation here where we bounce, hit that trend line, pull back a little bit, and then go again. That's kind of what I'm looking for, and that's more or less the game plan I'm trying to follow. My target in the yen basket is the high for May 12th, right? That's what I'm looking for us to meet. And then in the dollar, we got very close to my downside target, which are the lows from June. Very close indeed. But here's the crazy thing. The dollar, looking at the relative strength index for a moment, has never reached oversold conditions on the daily time frame despite this large sell-off. Now, we don't need to reach oversold conditions in order for a bottom to be in place for the dollar, but I do think it would be very helpful to see that kind of condition materialize. So for now, I mean, there's no evidence, technical or otherwise, to suggest that the dollar is staging a massive comeback here. I mean, we could trade in the dollar basket potentially, up to here where there's some structural resistance. We'd be in between the moving averages as well. And this broken floor here could now serve as newfound resistance as well. So that's just something to keep in mind. The ranges are tight in the dollar. It's a very tricky currency to play at the moment. But by and large, I would look for opportunities to short the dollar still rather than looking to buy it until we have evidence of a tradable bottom. And in the pound, so we hit this old resistance level again. This was a few days ago, back on the 20th, and we are just trading lower. So the key support here is the low from November 4th. If that breaks, if I extend this trend line lower, it's interesting that this trend line would also come in and coincide with this support level. What is that support level? It's the low from August 2019, August 2017, and March 2017. Okay, so keep an eye out for those levels here in the pound basket. All right, so those are the potential trades I'm looking at. I really like the idea of pairing the pound and the dollar against the yen. The pound has had a big move against the yen today, and so has the dollar, although the dollar has managed to do a nice little recovery. So if that recovery turns into a bear market rally, I think that's a great opportunity to short dollar yen. So in conclusion, pick your shots very carefully. Don't chase extended moves. We don't have volatility like every day of the week right now. We are getting volatility in selective bursts. So you really want to make sure that you're not you're not taking all these trades and then you don't have any capital left over to capture those big moves when they happen. So pick your shots very carefully. And also, don't chase an extended move. If a currency moves over 1% in a day, I'm not saying it's untradeable. I'm just saying be careful. Just make sure that it's not overextended. Make sure you're not selling into support and not buying into resistance. And of course, in a volatile environment, which we are still getting occasionally, just ensure that your position sizing is on point. All right, that's it for me for today. Thank you, everyone. I will see you next week.